Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we are here today to speak about one of our favorite subjects, blockchain, and more importantly, going down the rabbit hole of decentralized finance, also known as DeFi, and what's all happening in this space. We know we've had a ton of recent news in the industry, whether it be hedge funds acquiring other hedge funds, currency and exchanges expanding their offerings, to now countries seeing cryptocurrencies such as Bitcoin and others as legal tenders. We're going to talk all about that and so much more. Where are these opportunities that we should be knowing about as entrepreneurs and as investors to start building or placing our bets as well? Well, we're going to talk all about that today here on VCTV, as I'm joined by two outstanding co-hosts as well. But before I introduce them, a big thank you to the LATOKEN team and to Maria and Hasmik for making today's episode possible. Make sure to check us out on latoken.com to hear from today's speakers and all speakers of the VCTV family. With that being said, welcome, gentlemen. Chris, I'm going to have you go ahead first today. A little intro, a little background.
Okay, yeah. We've been in venture capital since 2000. Initially, we were focused on multi-massive online player games and voice over IP solutions, and everybody who is listening to this geeky topic probably knows kind of the similarities between those themes and the blockchain space, which we focus on today. So in-game currencies were already a thing back in 1999, with EverQuest having a daily exchange rate to the US dollar. So for us, it's not really much of a new topic, but then more importantly, I think we should talk about the Web3 primitives that are being built right now, which are the necessity for the topic that we're talking today, decentralized finance solutions. So we were one of the first investors into this space. We came across Bitcoin in 2010 through some of our contractors that we were paying in Bitcoin at the time, and we were one of the first allocators to the Ethereum ICO. So we have a deep portfolio of a lot of the projects in the space that you would know. We're raising our second fund right now. But we are excited about the topic in general, right? So there's a lot to talk about. So I'm going to hand it over to David so he gets his time.
Absolutely. Thank you, David. To you, intro and background. Thank you, Chris.
Sure. I am the president and a co-founder of ProChain Capital. In contrast to Chris, we largely focus on liquid, either tokens or securities in the case of the securities, stocks of companies that are involved in digital payments, development of blockchain, and support of cryptocurrencies. We do have a minority portion of our portfolio that goes ahead and invests on a seed and venture capital basis in some endeavors. The overarching theme of the fund is that we ignore form and invest in substance. So whether the growth is going to come from investment in a token or investment in a company through its public equity or through private equity in the form of seed and venture capital, we want to be able to go ahead and deploy capital across the spectrum.
Wonderful. And I'm very excited to have both of you here as investors. So maybe let's just dive right in. And before we get to the greater, broader conversation, let's talk a little bit about the news that broke late last night, early this morning. El Salvador, the president and its legislature passed the bill to allow for Bitcoin to be recognized as a legal tender, one of the first. So there's a few others in the pipeline. There's rumors that Paraguay may be doing something similar in July, introducing a bill as well. But nonetheless, this is a big move in the industry as a whole. Would love to hear both of your thoughts as to what this means on a greater scale, because if we look at the infrastructure, we've got Lightning and Lightning Labs that is participating. We've got Strike and Zap. We've got a few others that have really all helped make some of this possible and will in the future. But Chris, let's start with you. What are your thoughts on this big breaking news today? And then we'll go from there.
Right. Yeah. And heads up, I typically give like hour and a half long talks about all of these topics that you touched on. So you have to stop me whenever I go too long. So obviously, this is a super bullish signal and one of the things that we expected to happen a long time ago. And Salvador was kind of the next logical step because they have been actually using it as a payment instrument. If you paid attention to that space, which a lot of people obviously don't buy it for that particular purpose. They buy it for speculation purposes or as kind of a money of last resort, reserve asset. And so from a technology investor's perspective, we're trying to be very granular in terms of what are the use cases and what are the functions of these technologies. So I simplify it for the purpose of this particular call here. But if you look at fiat's function today, it's mostly simply that of unit of account, meaning it's your language of value. Whatever language of value you've been indoctrinated in, that's what you want to see on your digital wallet. That's why you see a translation into the US dollar when you're in the US, and you see a translation into the euro if you have a wallet that holds Bitcoin or Ether and you live in Europe, right? And so the reason why this is important to realize is because a lot of people kind of focus, generally speaking, on money, but that's very much a vacuous discussion, right? So you really want to actually, from a technology perspective, focus on what are the actual use cases. In El Salvador's case, it's kind of that's a niche use case of Bitcoin overall. If you look at how it's being used today as a payment instrument of sorts, and people denominate, might even use it as a pricing function because of the volatility of their own currency. At the end of the day, though, if you look at the larger picture, the primary function of fiat currency is simply that of lending. So unfortunately, we have a lot of useless debates in this topic around money because we don't define what actual use cases we are talking about. So in the United States specifically, most of the money gets created by the process of lending and lending by commercial banks. So that's our focus area because that has been very inefficient, and it's inflationary where you actually create new money for assets that already exist that are non-productive. So the secondary function of payment is really the secondary function, and it's largely already solved. So what I mean by that is most values are already digital. So the whole narrative of like digital money and so forth is kind of misguided because it's not nuanced enough in order to have an intelligent discussion about it. 97% of all money just exists as database entries. They are already bytes. So what's the important part then to realize is where we actually move to something that resembles a digital bearer instrument, something that settles physically real time, not legally. So when people talk about in the legacy financial system about settlement, they talk about legal settlement. When we talk in technology with things like Bitcoin that are digitally native assets, we're talking about settlement on a technical level. So, and the reason why this is important is this paradigm cuts across all of these solutions, as in where I have a digital asset that I can transfer peer-to-peer, I can cut out all the middlemen, all the time delays and fees and friction that are attached to that. So this particular paradigm is the most important paradigm to understand. And on top of that, the most important paradigm to understand is the actual reformation of how we do capital formation itself. And I'm going to stop myself here and hand it over to David for his comments, because as I said, I'll typically give an hour-long talk about all of these topics.
Thank you very much, Chris. I mean, this is a big topic, and this is very important, whether it works or it doesn't. I mean, this is very, very important to talk about. So appreciate your thoughts. David, to you, anything to add on to Chris's points, but also your thoughts in general?
Yeah, so Chris's points are incredibly valid, and certainly from a monetary and fiscal philosophy standpoint, I agree. I'd like to bring it down to a very kind of practical standpoint, and again, that may not jive with the philosophy in terms of monetary and fiscal policy. But at the end of the day, the fact that it's being accepted as legal tender goes ahead and potentially opens up financial activity in a way that we haven't seen before. In terms of the average Joe or Jose in El Salvador. And if it catches on across Latin American countries, I think that it will create difficulty for first world markets to go ahead and have major resistance to accepting Bitcoin, not necessarily as legal tender so quickly, but certainly allowing it in ways, maybe from a tax purpose, from a regulatory purpose, from legal purposes, to go ahead and push back hard against it. So, for instance, I spend a lot of time in Argentina, and there's a large portion of the society that frankly does not have any bank accounts. So therefore, everything is done in cash. A lot of nefarious activity is done in cash. This goes back to Colonial Pipeline in a way. The ability to go ahead and now have some digital trail on a lot of this activity is helpful. Certainly, it takes a bunch of costs out of the system, which Chris alluded to. It certainly takes a lot of carbon emission out of the system as well. So it's saving a lot of, potentially carbon emitting types of activities in terms of transportation and otherwise. And I think that, probably this isn't a panacea. I don't think 2 will be, but I think 3 will start to create a trend. And if in fact this runs, and gains momentum across Latin America, I think we'll start to see a lot of other emerging and frontier markets go ahead and adopt the same. And then there will be enormous pressure on the rest of the world. And therefore, I think that this is, to Chris's point about a bullish, sign, I think it's incredibly bullish. What we have to wait and see is 2 things. First of all, if there are other countries that are going to make the same move, and also to watch and see in terms of the metrics of this adoption inside of El Salvador.
Yeah, and maybe to add to that, actually the first country in the world to accept Bitcoin specifically as legal tender in some form was Switzerland in 2017. So there you could already in some cantons pay your taxes and local fees in Bitcoin. So that kind of got lost in the time frame, I think.
In Switzerland, Chris, excuse me, in Switzerland, are all merchants required to take Bitcoin?
No, they're not required. That's what I said. So they accepted it as a form of payment for government fees. So if you look at the definition of what legal tender is, it's at least in the United States, it's different across the world. I'm a lawyer by training, but then
likewise.
So then you'll notice that the typical definition is that it has to be accepted for debt and taxes and public fees and fines, right? So that's actually part of the large confusion that in private commerce there's no requirement to use the money issued by a nation state, right? So a lot of bankers even make that mistake, in my experience, that they think that this is a legal requirement for private merchant. It's not. If you and I, between the two of us, decide that Pokemons are money, then Pokemons are money in our context. And obviously we'll notice that as soon as you enter a casino, within the world of the casino, your poker chips and whatnot are considered money, and you can exchange it 1-to-1 for whatever US dollars the cashier will give you for it, right?
In El Salvador, are they requiring now that contracts can be settled in Bitcoin? In other words, regardless of how someone wants their tender, that someone can go ahead and present Bitcoin the same way they can present US dollars? Does anybody know the answer to that?
I can look up while we're going, I'll look up the actual bill itself, but I believe it was Chris can correct me, I am not a lawyer. I'm the one person on this panel that's not a lawyer.
Honestly, I haven't looked at it, but intuition tells me that wouldn't be very feasible, right? I mean, you can't change overnight the requirement for some merchants to accept a certain form, specifically if they aren't technically set up for it. And as David alluded to it, those are largely cash societies, albeit they are probably the most viable use case of a form of payment within that country, in terms of them actually making use of the Lightning Network, which across the world is really very much a niche case, right? As you know, it's very much a reserve asset. So, but as I said, so I don't think that you would want to do that, right?
One other point I'd make in terms of the importance of this is that we're dealing with largely a USD country, right?
Yeah.
So till now, they are a US dollar country
that
is converting to this.
Yeah.
So, I would, potentially, it could be a differentiation between what happened in Switzerland, which has its own very strong currency, certainly euro as well. Here it's a US dollar denominated country, which I think is important as well.
Yeah, so I mean, the Swiss franc is the most stable currency in the world at this point in time, right? So, I mean, regardless if you believe the official numbers of purchasing power, we can talk about that, albeit it's rather boring for most people, I think.
So let me interject for just a moment. I do have the bill that was sent around to the legislature last night, and that was signed. So according to the law, Chapter 1 Act, let's see, we're going to start with Act 2. Or arbitration 2, sorry. The exchange rate between Bitcoin and the US dollar, subsequently USD, will be freely established by the market. 1. Number 3, prices may be expressed in Bitcoin. And then 4, tax contributions can be paid in Bitcoin. 5, exchanges in Bitcoin will not be subject to capital gains tax, just like any legal tender. 6, for accounting purposes, the US dollar, USD, will be used as a reference currency. 7, every economic agent must accept Bitcoin as payment when offered to them by whomever acquires a good or service.
Wow.
As well.
And that's effective immediately?
I believe so. It is not effective immediately. Last I heard, it was over a 90-day period. So I believe there's 90 days to begin implementing that. So it's not an overnight change to both points. And I'm seeing it here in number 16, Chapter 1, Arbitration 16. The decree will take effect 90 days after its publication as well. So within, we'll give it, say, 90 to 120 days-ish, that will take effect.
Capital gains is a huge thing.
Yes.
Only because we're not going to get a mass exodus to El Salvador. I'm sure there'll be people that will move to go ahead and shield tons of capital gains that they may already have. But what I do is begin to pressure other economies around the world to at least consider the point.
Yeah. I think that's the primary function of Bitcoin overall. It will rein in government spending and this thing that people call inflation. And I say this thing that causes inflation because it's not really the printing, at least not in the United States, of money by the Federal Reserve System. That's kind of a little bit of a fallacy, right? Because from a United States perspective, the US dollar is our most profitable export product. People keep ignoring that, right? So most of the physical printed dollars are not inside of the borders of the United States. They're overseas, and it costs like 12 cents to make a $100 note. So you figure out the seigniorage on that. And these are not coming back, right? While they are kind of on from a simple legal perspective, they are obligations. They're not actually coming back in physical terms, right? And so when you look around the world, when the US invaded Iraq to capture Saddam Hussein, what did they find? They found hundreds of millions of dollars in physical cash in his palace, right? So this goes back to what is Bitcoin being used for? It's being used for actual legitimate access to transactions, because it's a horrible instrument to do crime, because you're creating a mutable transaction. But then, more importantly, the most used fiat currency in the world to facilitate criminal activity is the printed US dollar. So, and another kind of contradiction in that context is, like David mentioned, so you have to pay capital gains on Bitcoin transactions. And then also, if you're trading Bitcoin, you have to get a money transmitter license and a money service business license and so forth. So if that is true, right? So you have to pick. You have to pick that either Bitcoin is money and you need to have a money services business license, or the US dollar is not, right? So you cannot kind of have it both ways. We created this very contradictory, not that this is anything new, the government agencies do this all the time, right? They're creating laws without enforcement mechanisms, without the agencies behind it. But the larger point, I think, here is that technology will force laws to change, right? And the typical example I make for that, usually to create a metaphor that sticks, is when we first invented the automobile. Illinois passed a law that required a person with a red flag to wave it in front of and walk in front of that car. And so that's very much what we're doing with new technologies at the onset, because of the incumbents trying to prevent the implementation of these new solutions. Because how many fees can you extract when sending money around is instant and peer-to-peer and byte by byte? This is 30% of current commercial banks' revenues right now. And actually, if you look around the world and analyze the CBDC design papers, there's 2 teams around the world that have realized that, and they simply stop talking about it. They simply stopped developing this. So coming back to El Salvador, them implementing this will hopefully set a sign for other nations to do the same, even though it's probably more a call to action as a practical implementation. It's probably not very practical for most countries, to be honest, but it still provides you a mechanism. At the end of the day, and then I'll stop myself again, what you should realize is, if you look at the definitions, even of the Federal Reserve systems, that they kind of like silently abandoned right now of what is M1 and what is M2, for example. So M1 is kind of your spending money. It's like your demand deposit account, what people call a checking account, and also includes your cash. But then M2 is everything that just exists in databases that's being lent out, that either makes a yield or someone is paying interest on that. The point there being is that M1 is always inflationary, right? There will never be less fiat M1. So if, when, where I can automate and mitigate against this inflationary nature, but if I have a digital wallet that just moves from M2 to M2, why do I need M1? And I think that's exactly what the more intelligent people that have been spending a lot of time thinking about this topic and the technical implementation realized. It's the end of M1. At M1, stasis doesn't have to exist. That's why some of these proposals of CBDCs already propose the idea of paying interest on M1 again, right? Because right now, obviously, you're losing a tremendous amount of purchasing power, but you want to differentiate in terms of that purchasing power. What does the purchasing power represent? I.e., most of the purchasing power, most of the inflation is actually incurring to assets that we're inflating. So the housing market has been inflated 10% year over year for the past 10 years. And that's the next big bubble to burst. So we are heading towards a 2008 scenario on steroids, because none of the fundamental issues that came to light at that point in time have been addressed. We doubled down on them, right? So we inflated the stock market by doing allowing stock buybacks using corporate bonds. And then we inflated the housing markets. And both of these are non-productive assets, right? So buying stock back, competing with your own shareholders, doesn't create value. Putting a new price on the same real estate doesn't create economic activity. So when we look at investing in these construct, we're looking at this from the purpose of what does it facilitate in real world economic activity. I'll make one last point, and then again, I'm quiet about it.
But real quick. I'm sorry, Chris. I have to cut you off for just a second. Sure. You're telling a lot of great things of what's happening. But real quick, for those who are tuning in for the first time, CBDCs, central bank digital currencies. Go ahead, continue. Last point. And then I want to get back into
the last point that we wanted to talk about decentralized finance solution, right? So the way I look at decentralized finance solution is kind of a stepping stone, as in, if you look backwards throughout technological history, and more important, as it's connected to real world economic activity, we have assigned and ascribed initially like maybe 10% of GDP to financial services. Today, it's closer to 20. So you have to ask yourself, how much productivity did we add? And the answer is probably negative productivity. So decentralized finance solution mitigate against that. The larger point, though, is, and that's what some of the more intelligent academics came about to realize, is we need to definancialize the economy. Right, so we need to realize that the purpose of all technology is to increase efficiencies, right? So, and you're not increasing efficiencies by keeping database solutions around. So, very last point here is the big shift is that where we came from moderating commercial activity at scale using paper-based solutions. We moved to database solutions, then we assigned the right to maintain these databases to a small segment of private companies we call financial service providers and or banks. And so by moving to cryptographic primitives now, so that's at the core of what the change is about. Either you move cryptographic primitives using blockchain-based solutions, you map them using graph-based solutions. And so due to that fact, you can actually reassign ownership and control to the actual owner of that asset. So that's for the first time possible again, and kind of that's what DeFi at the end is about: is assigning control to the rightful owner, right, and not having that intermediary. Again, stopping myself.
Chris, I thank you very much. I laugh. I see David smiling as well. It's you've got a wealth of knowledge, and you love sharing it, and we're both very appreciative of that as well. So thank you for all of the points
Can
and
I
all the
follow up
last
on one
points.
point?
Yes, you may. There was about 5 or 6, so you got to call out the right one.
No,
All jokes aside, but go for it.
I'm going to go way back in the last set of comments and go ahead and focus on criminal activity. Because I do think right now in the United States, because of what happened with Colonial Pipeline and cyber attacks being such a hot topic, immediately our lawmakers, legislators are jumping on cryptocurrency as being the mode of payment that is desired by criminals. And I don't know, if a study has been done, as of late, but my guess is that if we could quantify worldwide what level of criminal activity occurs in fiat, in cash, and what level of criminal activity happens in digital currencies, I would say there's no way that the legislators are on the right side of this argument. And I think it's really important for them to be educated about this, because they're going to spend a ton of time, a ton of resources on something they don't even understand.
Yeah.
So real quick, well, hold on, Chris, hold on. We've got an internet delay, so you gotta pause for a second. Real quick, to David's point, Chain Analysis has done a report. There was a 2020 edition and now a 2021 edition of their crypto crime report. So where they go in and actually analyze what's happening around decentralized finance, illicit activity to laundered funds, and looking at on-chain data as well. Just for the audience, I want to make sure, and I dropped the link to you both as well. Chris.
Well, I mean,
you're released. Go for it.
It's really very simple. Regulation is not the solution to blockchain-based solution. Blockchain-based solutions are the solution to regulation, quite obviously, right? So you can implement all the objectives of the law perfectly in these type of decentralized software solution. That's one point. The other point is that obviously regulation doesn't address technology. Regulation addresses people. So you regulate people within your jurisdictions, and these technologies are global, right? So they're not going to change. You can't uninvent them. There's a World Wide Web. People that want to use that for a certain purpose will use it for a certain purpose. It's very important, again, to understand the difference between what is the function and what are the use cases. So to make this very simple, the function of a hammer is to centralize centrifugal force, right? So then the use case is typically to put in a nail into the wall. You can also use it to bash someone's head in, but that's not the initial use case why we invented this particular technology. So it's a little bit like going after the hammer, right? So the hammer is not at fault whatsoever. The hammer will exist. It's a useful technology to put nails in the wall, just like digital bearer instruments are useful technologies to instantly settle transactions, right? So these are all very much strawman discussions that these put forth. I don't for a second believe that these people are so naive to not understand these basics, right? They're very much agenda driven, right? You have to ask yourself, who are they representing? Who are they talking for, right? So there is no Bitcoin lobbyist or not much. We have Coin Center, but there is not much lobbying going on behalf of this open source paradigm. There's not much lobbying going on behalf of a free internet. There's a lot of lobbying going on for special interests that we all know, right? And so that is where this message obviously is coming from. This is just a bullhorn for special interest at the end of the day. So to have these discussions around illicit activity or energy use, again, this is just engaging with a straw man that is very easy to defeat with simple facts, right? You can just present the data and say, well, this is the amount of criminal activity being committed with physical cash is 3 orders of magnitude greater than that with Bitcoin or any other cryptocurrency. So, well, shouldn't you not focus on outlaw physical cash, which, by the way, is not going to happen, shouldn't happen, because last point, yet again, the larger point there is that most people is kind of this fallacy of like unbanking the unbanked, and Andreas Antonopoulos puts this pretty well when he says we need to unbank the banked, right? Because 40% of the world's population actually cannot participate in financial service because we created this artificial entrance barrier of having a government-issued fiat identity, right? So fiat identity doesn't make you a human, and that's 40% of the world's population that cannot participate in that. More people have cell phones and smartphones in the world, and they should be able to participate, and that's the technology to do so. Anyway, again, stopping
Pause.
myself.
Pause. There you go, Chris. Pause. Take a breath. This is all great information, and unfortunately, we're at the top of our time here. Right. So, I want to come, David, to you first. Let Chris breathe for a minute and relax. What are your thoughts on where we go from here with decentralized finance? Not necessarily just in reference to what we've been talking about. What are your predictions as a whole around DeFi? In your closing thoughts, and then where can you and ProChain Capital be found online to continue the conversation?
So I can be found at the handle on Twitter at ProChain Capital, best place to reach me. In terms of DeFi, I do have a concern that DeFi is going to become all about, at least in the short term, lending on Bitcoin, levering people's positions. If that is the case, that is not going to end well for anybody. First of all, crazy amounts of leverage are never good, especially with a volatile asset class, especially with super high rates on the lending, and it will draw a lot of scrutiny. Hopefully, DeFi will mean a much broader array of services, and certainly services that can be offered cheaper than the current offering of those services by traditional financial players, and more accessible to the consumer.
Thank you very much, David. Chris, I know you've got a lot to unload. We're at time. So I apologize. Don't worry. We're going to have you back. We'll do it. Don't worry. If anything, we'll have you and I just as a fireside chat, so you can just go. Maybe even a keynote. Yeah. Nonetheless, closing thoughts on the future of DeFi. But for you, I'm going to make you go a different direction. We didn't get a chance to talk about the Web3 primitives that are being put into place, and this idea of in-game future of on-off ramps and being able to bring that exchange to us. So in your closing thoughts, where do we go from here when it comes to on-off ramps around gaming?
Right.
And where can you be found?
Yeah, so it's important to understand that the most important thing we need to on and off ramps are identities. And I use that term loosely because it's really about agency and being able to transact and transcend the digital world to the physical world. Very simple example yet again, so just that it sticks. If I send you a Bitcoin, expect a crypto kitty back, I can do all of that in smart contracts. If I send you a Bitcoin and expect a real world tabby and my real world tabby doesn't arrive, I need to get the enforcement mechanisms that the real world requires in terms of written contracts. I cannot go with my blockchain entry to a court and demand delivery or my Bitcoin back. They don't know what to do with that. So the point there being is most of the value is going to be created in these kind of on and off ramps. But the most important thing we need to on and off ramps is the topic of agency and attribution. So that what people call identity, because the asset is only relevant, and yet again, to use kind of an MMORPG, multi-massive online player game analogy, if you develop a game world, what you first develop is your avatar, and then the avatar has slots, and these slots will let them pick up a gold coin, let them pick up ownership about a pick and a shovel and a sword, and take ownership of a real estate. We kind of, within this paradigm, cryptocurrency went the opposite way. So most of these systems won't be compatible with whatever the regulatory bodies decide is going to be your next fiat identity, and they are, more importantly, the onboarding mechanism of that. And that's what people need to be paying attention to. So Homeland Security is going to onboard your biometric data in a particular form. Once you have that type of fiat identity, this is what you're going to use to attach your real world commercial activity to, right? So anyway, again, I stopped myself to that. I wrote an article about that called "Taking the Red Pill." You'll find on Hacker Noon. It explains basically the topology of Web3, because all of this has to be seen in context of Web3. The most important thing to realize is what we're really doing is we're building the World Wide Web for the first time. What you and I are using right now is the commercial web. Google indexes maybe 4%, probably closer to 0.4% of the World Wide Web. And what you're doing is you're running a query against the index. You're not on the World Wide Web, kind of like you weren't on the internet when you used AOL. It's kind of like that. So the reversal of that involves the creation of cryptographic primitives that represent your ownership credentialing systems and so forth, like your agency attribution layer. And within those layers, we got all these middleware layers that we call cryptocurrencies, that we call new programs to decentralize domain name systems like FIO and Handshake and Estoppel domains and so forth, that create new indexes like the Graph that take data from blockchains and index that, right? So that's kind of a function that Google kind of does right now, indexes the web and so forth. But these are decentralized solutions that you cannot censor. Right now, the internet is just a censorship landscape, right? You're not really on the internet. You're using the commercial web for all intents and purposes. And from a human perspective, this kind of information sharing system that provides us all the same premises in terms of what is reality, this is what we need. So this is what we need to move to the next level as human society for global economic activity, and then also to account for externalities. Anyway, I'm going to stop myself. It's yet another 1 hour talk. I've been working on this topic for the last 13 years full time on the decentralization of the web. So for me, this topic of cryptocurrency is kind of a sliver within that, and it's super interesting, but it's like not the most interesting part. It's right.
There's so much more to discuss and to unveil as well. This is an onion with many layers, as one would say as well. So Christian, David, thank you both very much for your time and insights today. To our audience, thank you so much for tuning in. If you like what you heard, make sure you click subscribe, like, and share today's episode, and check out the archive on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family. A big thank you again to the LATOKEN team, to Maria and Hasmik for making today's episode possible. Make sure to reach out to Chris, David, and myself online. We'd all love to hear from you on social media. Tell us what you're doing, what you're working on, what you're building. We would love to continue the conversation, but make sure to add context, where you heard us, where you met us, and what the conversation will be continued about. With that, I'm your host, Kyle Ellicott. Everyone have a wonderful day, and we'll see you back here tomorrow for more VCTV. Take care, everybody. Bye.
Talk to you later, Kyle. Take care.
Take care, everyone. Bye.